Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive sellers were active near Friday's high, and at this point, we've seen a pretty decent sized pullback already in the overnight session, and the sell side has been more dominant. Heading into the open, we have initial support at 1910 to 1912, and that is still an area where responsive buyers can be active given the trend day that we saw on Friday. So 10 to 12 is still an area where responsive buyers can be active in the market, and that area can be defended heading into the open. Below that, we have 02 half to 04 half, which is a very critical area for buyers because it is the breakout spot from Friday and it marks the short-term balance breakout that's currently taking place. So as long as buyers can hold it above 02 half to 04 half, Friday's breakout would still remain intact on the larger time frame. So it's a very key area. And if we fail at 02 half to 04 half, then the breakout idea is invalidated. At that point, we can still balance within a range and buyers can still be active at the zones below. So 1898 and 1890 to 1893 are still areas that can be defended. It doesn't mean that the entire bias has to immediately shift and liquidate, but at that point, the market would not be quite as bullish anymore, and we would really be more just balancing in a range, and eventually that could even lead to lower prices. So right now, our bias is going to be neutral to bullish on the day time frame, anticipating responsive buyers to be active at support and looking to target a move back up towards at least the 23 half to 25 half pre-market resistance and even the 28 half to 30 half initial resistance zone with potential to actually test the overnight high at 32 half, Friday's high at 33, and depending on the intraday momentum and broad market strength, perhaps even test the 37 half to 39 half. But we have to keep in mind that we're still in a market where the bigger picture bias is bearish, and anytime the market tests a larger time frame resistance area, which was like the 31 half to 33 half area on Friday, and this 37 half, 39 half, 43 quartered, 45.75, we can still get sell side activity, and first test of those key resistance zones can still attract responsive sellers because of that bigger picture bearish bias. So right now, it is a little bit of a mixed picture, still giving more edge to the buy side given the strong trend day on Friday, but most likely the market will put in a consolidation type day today with buyers active at support and sellers active at resistance. We don't necessarily have to break out above Friday's high. It's a possibility, but that's something we'll have to gauge in real time. If we're seeing any kind of excessive weakness, then it would lower the odds of actually breaking out above Friday's high, but retesting the 23 half to 25 half and 28 half to 30 half is still something that can be done without too much effort. So that's the main idea on the day, is for the market to consolidate the gains that we saw on Friday. And ideally, you want to see it holding above 1910 to 1912. A little poke below would not invalidate the idea. But the final spot where buyers can really defend on first test, and it's a high probability area for buyers to be active, is the 1902 half to 1904 half. And that's actually an area that can even shut off the downside and reverse the market back up towards 10 to 12, 1375 and beyond. So right now, heading into the open, like I said, the bias is going to be neutral to bullish, and because of that, we are going to be cautious on entering short at an aggressive price because right now the market can just chop around here. So given that the expectation is for consolidation, you just want to really pick your spots. Be careful of trade location. Make sure you're not entering a trade kind of just in the middle of chop without any real momentum behind it. If you're taking a momentum-based trade, then the location is not as relevant. But if you're taking a trade based on just good trade location, then it has to be at a key zone. Otherwise, there's not going to be as much edge there. The other thing is with econ, we have a few econ reports out 9 a.m. Central Time, ISM manufacturing and construction spending, and then Google reports earnings after the close today. So that can kind of just further make this more of a two-sided market. So those are really the main thoughts heading into the open. Let's see if the buyers can defend the 10 to 12 area here and possibly 1375, and we'll take it from there.